Okay, we're going to look at our first video for Chapter 5. Chapter 5, we make
The move to merchandising businesses. Everything we've done up until now has been a service business, right? Service businesses sell time or services, right? And that's how they earn their money. Merchandising is a little bit different, right? Merchandising, we add inventory to the mix, right? The merchandiser buys a box of things and sells that box for more money than they paid for it. They don't add anything to it, right? So this is the service organization, right? Accounting firms, law firms, that's what we've done. And we know our income statement is what? Revenue minus expenses is net income, right? That's something that we already know and we're comfortable with. What we're doing now is we make the move to merchandising businesses, right? So if you think about how things work in life, right? Somebody manufactures something. Apple makes a phone, and they sell it to a wholesaler that sells it to a retailer that sells it to you. Well, all three of these, right, and especially these two, are buying and these are selling merchandise inventory. So now we're going to focus our energy at this wholesale retail level, right? Manufacturing accounting we'll deal with when we get to accounting 203. As a consumer, it's a different deal, right? So we're going to deal with wholesale and retail kind of businesses, right? So this is where our energy is going to be focused on this particular chapter. Now, like we said, merchandising companies sell products to earn revenue, right? So here's our old school income statement, right? This is what revenue minus expenses is net income, right? Just like we're used to. Now, in the merchandising concept, we add another layer or so to that, right? We make our income statement a little more complicated. Sales, that's our revenue account in the merchandising thing, right? Cost of goods sold is the expense that deals with inventory. We're going to talk about that, and we subtract those two and we come to gross profit, right? Which is how much you've made after you've covered the cost of your inventory. We have less expenses, gives us net income. These expenses are the garden variety expenses that we're used to, right? Wage expense and advertising expense and all of those kind of things, right? So we get to net income. So this would be the income statement for a merchandising business, right? We're going to take a little bit closer look at these two side by side. Okay, so Liberty Tax, a service business, revenue minus expenses, net income. Single step income statement, right? Now, we look at this income statement for a merchandising business. They have net sales, which is what? Revenue, right? So for penciling this out, it would be what? Sales or revenue minus what? The cost of goods sold. Our expense account dealing with just inventory items, right? Gets us to gross profit minus operating expenses is net income, right? This is a multi-step or multiple step income statement because it takes us more than one step to get to the net income number, right? It's more complicated, but it also gives us more opportunities to analyze things and to examine how we're performing and whether we're making enough money after we sell our inventory and those kind of things, right? So our income statement got a little more fancy, a little more complicated, but that is the multiple step income statement. Now, that's our first thing that we deal with when we're dealing with this merchandising kind of stuff. There will be more to come shortly.